Okay, I think we have received a second chance to go with this panel discussion. So yes, as hopefully we have participants that have also been able to go to this other platform, to StreamYard, where we are having the panel discussion. We experienced some technical difficulties at the previous originally prescribed one. So as we already lost some 10 minutes, I will then try to be quick with the announcements and to give the floor to our panelists. So first of all, welcome. My name is Neven Marinovic, and I'm here on behalf of Responsible Business Forum Serbia, who is one of the hosts of this session. And I'd like to thank also our partners from CSR Europe for giving us the space to talk about the issues that are of importance to us and that are of relevance to us, and hopefully to some other people joining us at the SDG Summit. As you all know, there has been many talks about sustainable financing, about responsible financing, about people call it different names, financing with impact, ESG finance, and there has been many initiatives also, be it on the European level, on the global level, or on the level of national countries, from taxonomy to different initiatives from the European Investment Fund, European Investment Bank, EBRD, and others, to try to kind of a push towards a more sustainable and I would say responsible financing. The thing is that we want to see that the SME sector is becoming more sustainable, to embedding the principles, to see them to embed the principles of environmental and social responsibility. But on the other hand, as we kind of want them also to grow and to be more prosperous, both financially and in other terms, they rely heavily on funding and financing from investors, from financial institutions to achieve that. So today we will be talking about especially the situation in the Western Balkans, which is close to Europe, but not there yet. And we will be talking about the situation around, sustainable and responsible finance there, and what are some of the key challenges, what are some of the key initiatives, what's already been going on, and who are some of the players trying to make this thing move forward. Today with me, I have three excellent speakers, panelists, experts, whatever you want to call them, but people who are really on the ground and doing stuff and moving things. So we have Amra Omeragic, who is a senior investment officer at Finance in Motion, based in Frankfurt, but also working around the region. So Amra personally is based in Sarajevo, in Bosnia and Herzegovina. Hello, Amra. We have Mirena Šakić, who has been one of the key figures behind the social banking platform of Erste Group, based in Vienna. Although Mirena is also one of ours from the Western Balkans, but we kind of exported her to Vienna, to do some good work there. And I think we lost our third panelist, so hopefully he will join us back. I don't know if you do see Shkelzen. I don't see him at the screen. I don't know. Yeah, he'll probably will try to kind of rejoin him. But just to say briefly, okay, here he is. Shkelzen Marku, who is the director of Yunus Social Balkans, based in Tirana, Albania. As you all know Professor Yunus, the Nobel Prize winner, who has started this investing into social banking or microfinancing, or whatever different people call it. So Shkelzen has not won the Nobel Prize yet, but still does really good work on the ground as an intermediary organization supporting SMEs in the region that have positive social impact to further develop and grow, but not endangering sort of their social and environmental mission. So that would be that from my side in the opening. So maybe we can start from let's say more classic financial institutions, which would be Mirjana. So Erste Bank is definitely not a classic financial institution because you do a lot of things that are kind of out of the box, and the whole setting of the bank is a bit specific. But maybe you can tell us briefly what's the relationship between Erste Group and sustainable finance, and why would you think why do you think that is important for financial institutions such as yours?
Thank you, Neven, for this introduction, and thanks to Responsible Business Forum for invitation, as well as CSR Europe for the opportunity to share our experience and this, I would say, now more than a decade long way of activities in the topic that you just mentioned. So just to set up the stage and to share a little bit of where Erste Group is working. Erste Group and Erste Bank is a 200 years old savings bank. So let's say a standard saving bank operating in 7 markets of Central Eastern Europe, including Western Balkans. We are employing more than 47,000 people. And as mentioned, besides the retail business, we are, of course, supporting SMEs, so small and medium-sized enterprises, as well as large corporates in last decade. When we talk about, let's say, the development of CSR, of sustainability as a topic, I can share with you also from my personal experience since I joined the bank 13 years ago. At that time, I was working in Belgrade in one of the branches of the Erste Group. And I remember once we started to develop the CSR strategy for the bank, it was such a novelty in our market that actually it took us quite a while to introduce the topic, not only to, let's say, our employees and co-workers, but also to a wider community. Very soon, so we started, let's say, with basic CSR activities. So by the book, like how do you treat the employees? How do you treat your communities? What do you do as an extra step, as an extra mile in your activities to ensure the better quality, the better service, not only towards your customers, but of course, much wider stakeholder community. And of course, at these beginnings, Erste Group was a kind of wind in the back for the region that you just mentioned, because we could replicate, let's say, or draw some learnings that the bank already did in more developed markets, such as Austria, and later on, of course, the banks from Central and Eastern Europe. But at the same time, even though that this seems to be like a great point, this was also a challenge due to the fact that nevertheless, that as you also mentioned, we are neighbors and we are at the doorstep of the EU. Each of these markets are so specific that it was very difficult to, let's say, launch or develop some kind of a CSR program that could be overarching and a kind of an umbrella program for all the countries. So actually, when you talk about the CSR activities, what we did, we actually, regardless of the knowledge and the experience that we had in our headquarters, we had to do our homework ourselves. So very soon, I would say, progressed from starting like basic CSR activities such as volunteering programs or some donor activities. We realized that the CSR must be brought very down to earth to our core business. And if you remember, Neven, actually, we did this together with Smart Collective now 12 years ago. I was just counting, and I had a little bit of noise in my head when I counted how many years passed. But actually 12 years ago, we realized that regardless that we are a bank, claiming that we and providing financing for everybody for their development, we realized that we didn't support starting entrepreneurs. We didn't want to finance people, especially young people who wanted to start their job, their first small businesses. And that was the first time when I realized that the CSR must be brought to our daily work. And this is how actually I started more and more, let's say, deeper involvement in the programs that the bank did and the whole group. And this is the next step, I would say, when I joined the headquarters in Vienna 7 years ago, joining the team who was supposed to develop social banking development in the whole group, meaning that we as a company, we as a bank realized that we do not support social enterprises, young startups, risky businesses, people who didn't have a lot of money, who didn't have collateral. And that's how I would say we transferred this nice CSR vocabulary and moved from reporting on how much paper we produce, which we still do, or how much, I don't know, green foot we managed to reduce or things like that, and brought these activities and these terms to our core business. In our bank, sustainability, of course, is dealing with so many other topics, such as diversity, such as financial literacy. But I'm the firm believer that unless we manage to really incorporate and embed this responsibility in our daily business, it will always be just an island. And this is why I was really pushing, together, of course, with the great support from the management, but also from all the banks in the region, that social banking should not be a side project of a bank, which is a nice thing to have, but when the crisis comes, you just cut it, or as we know what is happening these days, but to make it also sustainable as a standard business such as any other. And what we see these days, that CSR, when it started, or at least when I managed to deal with a topic like a couple of years ago, this was really, as I mentioned, a kind of a not very tangible. It was very difficult to transfer it into daily work. But once there were SDGs introduced, we were able to say, okay, now we have a framework. Now we can really transit these words and these activities towards some tangible goals which are internationally recognized. And what we see these days, and I'm closing with this, that actually SDGs for us as the financial institutions are being now transferred into ESG. So there is a new framework which is these days becoming binding. So this would be a kind of setting the stage in our region, and my personal view on let's say from CSR towards SDGs, through SDGs towards ESG, which is now, as you mentioned, a kind of a policy in the EU. And it will not be any longer a matter of our goodwill whether we want to do this, but it will be a clear indicator, not only exactly, and not only towards investors, but especially towards consumers. And I will come back to the power of consumers maybe in the next round.
Thank you, Mirjana. And so, Amra, you are also representing a financial institution, but not a bank. So, Finance in Motion is like a more, well, not more like, but an asset manager. What is your involvement, with this topic on one hand, and on the other hand, why do you think that it's important to work in our region, in the Western Balkans, especially given that a lot of people are saying that it has a very slow growth rate and not many things are happening. So and my feeling is that both you and Mirjana organizations are heavily focused, especially on this region. So if we can first hear about what does Finance in Motion do, and maybe what's especially doing in the Western Balkans region.
Yes, thank you, Neven. Thank you all for the invitation and to having us present and take part in the conference. Yes, Finance in Motion is one of the, like you said, it's one of the world's leading impact asset managers, focusing exclusively on development finance. So far, we have mobilized over 5 billion euros for positive change and in low and middle income countries over the course of the operations. Finance in Motion is managing 5 impactful funds, and one of our biggest funds is EFSE, or European Fund for Southeast Europe. This fund is working in 16 countries. So the target countries are Southeast Europe, Turkey, Eastern Neighborhood region, and we are working throughout 10 local offices. And like you said, I'm sitting inside a local office. The goal of the fund is actually to foster economic development through provision of sustainable development finance and provision of access to finance for micro and small entrepreneurs, but also for rural development and for housing loans. This is done through financial institutions that we are working with. These are mainly banks and microfinance organizations. Currently, the loan portfolio of EFSE is 950 million euros, which is invested in 67 partner lending organizations. Like I said, these are financial institutions in these 16 countries. The fund is actually a public-private partnership of donor agencies such as EU and some governments of Western European countries. But also we are working, the donors are also international financial organizations such as European Investment Bank, EBRD, KfW, FMO, IFC. And also we have private investors on board, and these are usually commercial banks. The financial instruments that we provide are mostly senior loans, subordinated loans, and in some cases also equity. In parallel to this fund, we also have a development facility or the technical assistance facility, which is provided by the donors to assist the capacity building of the financial institutions that we are working with. But also over the last few years, it has been used to support entrepreneurship initiatives in the countries that the fund is operating within. So this entrepreneurship support has been mostly prominent through EFSE Entrepreneurship Academy, and it is the initiative of the fund designed to build the entrepreneurial ecosystem in the region. It is through this initiative that we have been supporting organizations such as Smart Collective, along with a number of other business support organizations in the region, with an aim to strengthen and to enable the ecosystem of entrepreneurship through capacity building of the local incubators, accelerators, investment networks, and VCs. Our special focus has been on development of impact businesses and social entrepreneurs in the region, and also businesses who are in the very early stage of development, such as startups. So the question was, why do we support the region? Yes, and my particular focus is also Western Balkans. We see there is a lot of talent, there is a lot of potential for entrepreneurship. Unfortunately, people do not take entrepreneurship as a career option, but there is a lot of talent and an opportunity, and I think entrepreneurship is quite important to actually build the economy. So this is why over the past years we have been engaging a lot in supporting and building the capacities in order to build the ecosystem. I hope this answers your question.
Yes, yes, thank you so much. And so now, Shkelzen, from your perspective, you're sitting a little bit on the other side, working directly with entrepreneurs. And so, first of all, can you tell us? I mean, is the, let's say, the vision of having SMEs that are sustainable, that are impactful, but also economically viable and kind of growing. Is that just like something we would like to happen as a nice dream, or is it something that we can actually expect? And if this is something that we can expect, at least to a certain extent, so what are some of the either challenges or your recommendations on the way of getting there? But first of all, maybe just for setting the scene, is like you can tell us a little bit about what Yunus actually does, so that people can understand where does your experience comes from.
Thank you, Neven. We started in Albania initially as a project in mid-2012, and very soon we started working on social business together with the team of Professor Yunus. And the biggest assumption at the beginning was that the access to financing was the main constraint to build social businesses. And when we started that, I remember very well people saying, yeah, but you were between the guys who fought against the communist regime, because I was a student at that time when Albania changed from communism to market economy. And I say, yeah, but you were part of a protest to put down the system, and now you want to bring socialism again and communism again, having businesses. So the context was completely different, and it was very difficult to explain to people, or it was very to be understood how you can work, build a business for the community. But soon we started with some models and with some people, and we started creating some of the initial models. And actually, then there were more and more people trying to say, yeah, it is hard to do it, but it can be done. And we see, of course, we realized that although we started with the initiative of building a fund, not a microcredit, but an investment fund, a social business fund. And we realized that it's not just the access to money. Before accessing the money, actually, there is need to help entrepreneurs, young entrepreneurs. And we were working mostly with first-time entrepreneurs, people which had never done entrepreneurship before. And we were working with communities in marginalized areas. So there were even more challenges. So there were challenges of helping them to build a business, a normal traditional business. And then we were asking them to do a business which will create positive impact for the community in any way, by employing people, providing services to marginalized or vulnerable groups, etc., or tackling one environment problem, which was, so it was very complex. So we kind of shifted from the logic of becoming a fund. We shifted towards an ecosystem building and trying to work with entrepreneurs to help them become investable, and then partner and work with investment institutions who are there, like finance in motion partners, microfinancing, all the microfinance and banking institutions which are supported by EFSE Impact Fund, to finance them. So bring them at investment readiness level so they can access the available funds around. And again, at the beginning, we had difficulties to build these partnerships with private traditional companies and with banks and MFIs. They were saying, yeah, but we want to see the financials. We are not interested. All these social things, you are complicating the life of the businesses. Instead of becoming instead of breaking even very fast and being able to pay the loan, you are delaying the break even. You are sending these guys to bankrupt. So at the beginning, we had difficulties to get an understanding, to support them. And then we started saying, yeah, but let's work together. So we will keep accompanying. So you give the financing. So in a traditional business, you give the financing and you leave them alone. So they keep paying. So in this case, this is a more difficult business. We will continue accompanying your client in order to help ensure that the business will survive. And at the same time, besides paying the loan, we will help them build and continue to build and improve all the business models so they can produce also the social impact. So slowly we started creating some models, and the first models we created in partnerships with the banks. And then we started working also with corporates, and with corporates was even more difficult. Because banks were more into this system of, yeah, let's do more, and they had started before with the CSR initiatives, so it was easy to get understood from the banks, but businesses was a bit more difficult. But slowly we started involving the businesses in this process. So now we have some of the corporates which are joining this initiative, and not only startups who are trying to go towards social and impact business. And we see also a tendency, luckily, that young people now, even when they come with the logic of building their own business, a traditional business, they're eager to bring some additional impact for the community. So there is more feeling that, yeah, I own something to the community. So even if I am building my own business, and even they don't call it social or impact business, yeah, I want to come to the accelerator to build my business. And they have some of the indicators that they objectives within themselves that you can very easily identify that they are linked with the society, they are linked with the sustainability or with helping some people, and many of them, and more with the environment. So luckily with young people, I think to respond to your question, we have hope with the young people, and this group of people which are aware and willing to start doing good things is slowly increasing.
Thanks, Kelsen. And looking at the financial side, sort of speaking. So Mirjana, you have slightly touched upon, what do you do as a bank and social banking? But I guess social banking is only one of the aspects of, what the bank does. And in a way, investing for impact or sustainable investment are still, I wouldn't say a margin, but are still kind of are set aside, as opposed to traditional, investments and traditional financing, which is only looking into growth. So what do you think, and what would be your recommendations, for other either banks or businesses, how, what should be done, in order for all of us to work on, mainstreaming that, and what would be, what would be your lessons learned, from doing that in saying, well, this has been done, and, we kind of made some mistakes or not, but, this is how we want to move forward, or we are completely abandoning the idea. I mean, that's okay as well.
God forbid. No, we're not abandoning. And I love what Zen mentioned, money is not enough. And we learned that actually you cannot apply the same, let's say, business as usual and to go this retail approach and just to expect that more and more and more will come, because it will not. We are here to develop the market and access to finance for not only, let's say, social businesses and social enterprises, but for any future business that has impact somewhere in their scope. Money is not enough. We all need to learn. It took us in the bank, and I'm saying this very openly, more than 10 years. And we are good in learning in banks, but it took us more than 10 years to really develop special risk processes, risk procedures, all the other, let's say, standard elements, which are there, but they're not the same as we used to know them. So we as bank has changed a lot, and I really hope that also our partners, not only in accelerators but also our clients, can feel and see this change that we are going through. And I'm personally fully convinced that the impact investing, and if you look at the figures from international reports such as, and like Jen, please correct me, what is the name of the biggest organization that is tracking also the impact investing? Regardless, you can see that there is a rise. It's not like it's not really high rise, but more and more investors, and I'm talking about big investors, are taking into account what is done in that area. What we need to do from our side to, I will not use the word mainstream it, but to accelerate it and to make it bigger, is to monitor. It took us also 5 years together with the University of Vienna to develop the methodology, to develop the systems. How do we measure this social impact that is very often either not catchable, but it's there. And, seeing is believing. So I can also invite you to visit our website. There you can find impact assessment reports. From every 2 years, we do a very detailed impact analysis to track not only what kind of economic development we manage to support with these kind of activities, but also on what kind of a social impact is there. If we do not measure, if we do not know, and if we cannot compare, then it's much, much difficult to persuade and to prove that there is a difference if you do invest with an impact or if you do invest for impact. I'm believer, and I'm really fine with both approaches, as long as impact is measured, evident, and also, for example, nowadays we even develop the kind of incentive for the clients, and you can see this approach also with the big financial institutions that you also mentioned, such as EIB, EBRD. They also provide financial incentives if you can prove with clear evidence that besides economic impact, there is a clear social impact. So measure, measure, measure. Make partners invest much more into also internal learnings. It took us really a long time also to persuade our colleagues from risk departments, like that this makes sense, not only sense in terms of finances, but much, much wider approach. So it's not enough just to provide money. Non-financial support is crucial, and we can see these days that even big companies need knowledge. It's not only about access to finance. Knowledge is, I would say, at the same relevance. Sometimes I would even put it a little bit higher on the scale.
Thanks. Yeah, I think that's very useful, and to kind of understand that it's a comprehensive process, not only about giving money, because also what Skelzen was mentioning is that we had similar experience that people, somehow money comes first into our minds, So when you ask people what do you need, say money, it will solve all our problems. But then when you kind of try to dig deeper, you see that there is also knowledge, there is also support, there is the whole ecosystem that actually you need to support in order for the money when it comes into to be optimally used. I wanted to say that we've been informed that we have 32 people at the panel. We are not able, unfortunately, to have the questions in the chat, but I guess if there are some questions come to the organizers, they will let us know. So it's good to hear that not everybody has lost their way from one room to another. That happens at these conferences. Say, well, it's not this room, it's that one, and then you end up at the hotel lobby having a coffee or something. But this is not the case with us.
I miss that.
Yeah, me too. So Amra, I mean, similar question goes to you also. Especially given your focus in the Western Balkans. So what do you think can be done? In order to kind of mainstream this a little bit further, and how to make this mainstream into finance industry, sort of speaking, and also, what do you think? And this could be a good lead also to Skelzen later on. What is needed on the receiving end? How you also working with entrepreneurs. What's your sort of speaking impression of how do they understand impact? Why do they pursue it? And how we can influence also the businesses to understand the role of impact better, not only as something they can get funding for, but as something integrated into their operations.
Yes, thank you. Yes, just to follow on to a discussion that Mirjana has pointed out, I think when it comes to financing to SMEs, banks have a very important role to play, because I think most of the SMEs have a loan at the bank. So the banks are at the position also to influence what the SMEs are actually focusing on. So they can also influence the consumer behavior through the financial products that they offer. So your question, what can we do to make the impact financing the mainstream in the finance industry? I think it also depends a lot on the level of required coordination and the timelines. I think in the short to medium term, while if we are talking on the level of an individual financial institution, I think they can do things like creating financial products to increase the accessibility at the first place. So it's something that, for example, Erste Bank is doing. They can also launch and grow dedicated impact investment banking capabilities. This is what Mirjana has also mentioned. There's a lot of capacity building within the bank that can be done. They can also develop certain risk assessment tools, which is also part of their capacity building. When it comes to a coordinated approach among different institutions in the short term, I think there could be a creation of some industry-defined funds to stimulate the market development, and these would be ideally created to yield commercial terms to investors, but also to operate in the right way, to use some donor capital to clearly state the social outcomes. So it's something, it would be like an investment vehicle, I'd say, to push those investments in impact. Of course, in the long term, I think there's a lot of things to be done, like setting up the industry standards for social measurement, developing impact investing network, development of a common language. I think common language platform also would be good, so everybody knows what they are talking when they talk about impact investing. So ideally, these would be, I think, some of the ideas. And on the receiving end, when it comes to entrepreneurs and how do entrepreneurs understand the impact, I think when it comes to our region that we are working with, which has a very high unemployment rate, people here usually engage into entrepreneurship out of a need, because they need to create themselves a job. So it's a job for them and their families. So what we see lately, however, it's something that's been mentioned also when it comes to the new generation of young millennials. There is a lot of young people today who want to engage into entrepreneurship and want to, at the same time, change the world, make an impact, make a positive social or environmental change. But it's coming up. There's a lot of potential, I think, there. But what we see traditional business, we see also people who are making impact, but they are not actually aware of it. So I think that a lot of awareness raising also needs to be done through business support organizations like Smart Collective and others in the region. I think this is what we are doing. We are creating, firstly, the awareness raising. So what is it actually to be impact business or social business, social entrepreneur, what it takes, how to get support, and this is what we are doing through mentoring, through capacity building, through these accelerators. We're trying to firstly build the environment, and we know that we are at a very, very early stage. I think it will take years. Like Mirjana said, it took 10, 15 years to make a step in the bank. I think it will also take us 10 years to see the impact, but I think we're steadily going there. We're taking the first steps in the entrepreneurship area. We're working closely with the entrepreneurs and pushing the moving things.
Thanks a lot. You actually touched upon a lot of things, that are kind of good for also wrapping up in terms of, what we also need to do, like from awareness raising to other things. And Shkelzen, the question for you, but also Mirjana and Amra, you can also kind of think about it, so that we have some kind of a last minute conclusions at the end. So Shkelzen, you have described in a way this way of how you started working with entrepreneurs, and also Mirjana and Amra have also touched upon that issue that some of them do not understand they have an actual impact, some of them do, and what are the motivations from the financial institutions to get into this, what are the challenges with entrepreneurs, and having mentioned all of these challenges, what is your kind of a take on the future of sustainable business and sustainable financing in the region? I mean, do you think that the sector will grow and that there will be more support and more systematic support, or it's, I don't know, under question? And I think also for all of you also to think about, because we are speaking at the European event, in a way, what do you think should be the role of European institutions in this, and how they can further support you as actors and all of us in the region to kind of fast track this movement at the end of the day?
I think that there is a good tendency that the sector is growing, and the sector, I think, is growing mostly because of their internal will to do things, rather than there has been a huge support from international organizations or governments, or so I think it is more internal from actors, from individual banks who are a bit more open-minded, from individual business, from local incubators, rather than big support from government. So taken that this change and whatever has been done mostly by individuals and their goodwill, I think this is coming internally, and this has potential to continue growing. And I think in order to be supported and to grow it faster, I think there is need for a more serious decision making and prioritization from European institutions and governments to support actors to push that. I know that all the governments and EU institutions need long time to change. And we have seen that there are a lot of environment policies and all social policies which have been talking for 10 years, 15 years, and then we start another 10 years starting testing few things. I think now we are at a stage where we don't have 10 years to think of it, and then 10 years to start testing it, and then 10 years to think if we should upscale it. I think the sector needs to be prioritized as a very important support, a very important sector by government institutions and EU institutions. And this is the message that I would like to leave them. Time is flying. Everything is changing so fast. technology is coming so fast. So, and especially now with the pandemic situation, we need to move faster in supporting new things and things that have impact. And I say things because there are different sectors and different elements that need to be touched with the angle of social and sustainable impact that we need to create. So we need to move fast, and local actors all are doing their part, and they're trying to do the best. So big players need to come in seriously and move fast.
Fully agree with Zen that we don't have so much time as we maybe had, or this, let's say, the luxury of these years ahead us as we see things are changed. But still, I would disagree that a little has been done. Actually, just a couple of weeks ago, there was a big analysis on the EU level on Social Business Act, which was developed by the Commission 10 years ago. And I think we should pay a credit to the Commission for the work and the push that this Social Business Act performed, because since then, not only that the Commission has also supported the member states to think locally, as Zen said. So I believe that some of the local activities are the result of the push from the Commission level. Thumbs up for that. I love the political pressure. This is, let's say, one side. But on the other hand, I especially raise two fingers up for the instruments which were developed by the Commission and by especially European Investment Bank. Let me remind you that since last 5 years, every bank that wants to finance these kind of business venture is eligible to use the guarantees, which are super available for the banks, reducing the risks. For example, the bank that I work for, Erste Bank, has signed with the European Investment Bank a guarantee fund of 50 million euros 3 years ago for supporting social enterprises. Without this instrument, we would not be, sorry for this slide, without this instrument, we would not be able to support as many entrepreneurs. So I believe, and now with the announcement of Invest EU, I'm optimistic, and I'm really looking forward, especially now with the Commissioner Schmidt, who is also seeing the connection of many EU policies, that this is not an island policy or an island activity, but that this is, we are talking about really connected ecosystems and activities that for the results should have the sustainable development, but the well-being increase for everybody involved. So I'm really looking forward for the InvestEU program. And if you take a look at the figures, and we bankers somehow always do, InvestEU has dedicated a special window for supporting the social ventures and more sustainable businesses. So yeah, full eyes, but also the criticism will go forward the new Commission.
Good. And what about you, Amra? What's your kind of a vision of the future?
Yeah. Well, thanks, Mirjana, for reminding us. For sure, there's been work done from the EU, and when you mentioned the financial instruments such as guarantees in the financial sector, it's been moving a little bit forward. I think there's a lot of room still to be done on the private investor side. I think a lot of private investments and private investors need to come in when it comes to this type of investing, because in the region it's still not there. It's at a very early phase of development. And also, yes, I think what we can do from the ground up, we are doing. We're hoping to see more support in the future. But I think there is potential, and things are moving, and it's good to always cooperate and sit together like today and to hear each other. It's always moving in the right direction, I think.
Thanks. I also think that we have shown that we are also, as people working with social entrepreneurs who are often working in with scarce resources and have to be kind of a witty, that we are also resilient. So we have been able to overcome the technical difficulties very easily, to move from one platform to another. And I think some of the let's say conclusions that I got from this discussion, for which I thank you very much, is that on one hand, there is a lot of challenges, and especially a lot of challenges in the region, which is overwhelmed not only by economic problems, but also with political instability in many different ways, and underdevelopment in due to many different reasons. So I think that is, for me, even more a case for why we should be building economy based on sustainability, or based on the responsible production and consumption, circular economy. And at the end of the day, how this can also help the whole region kind of move forward. The other thing is that it's very important to have some kind of pioneers from every side and corner. So having you guys here doing the work, and then others can also jump in and also learn from your mistakes at the end of the day as pioneers, and learn from your experiences. I think that's, somebody needs to take that role, and I think we already can say that we have a critical mass of people that are already there, and that can put some initiatives forward, and kind of are proving that these things can actually work. At the end of the day, I think what some of you mentioned, I think Amra at her last take, was that it's definitely, this thing requires even more so cooperation than maybe some other. I mean, the whole SDG area, and if we really want to achieve the goals, we need to work together. But here, if we want to ensure that SMEs that are lacking resources, that are lacking knowledge, that are lacking funding, at the end of the day, want to kind of move forward, I think we really need to work together, both from the top down, having the European Union and the national governments, but also from the bottom up, having, awareness raising, and, the local ecosystems to support them at the end of the day. So hopefully, I mean, I can, if you want to add anything, I think we have a few more minutes for these things. So any of you want to add some final remarks? Or you're good?
I would just like to add that the sector is growing. Take a look at the figures in our reports. I think that Amra, you also just recently published also your impact report. Look at the reports. Sector is growing, but yeah, more and more is coming. So I'm really optimistic.
To end with an optimistic note, and also I'm sorry we were not able to kind of be at the original platform where we would have more interaction with the audience and more questions. But hopefully this is not the end of our kind of a dialogue with this audience, and I would encourage you all also to either write to us, or stay in touch with through us or with any of the institutions present here at the call, because we would be looking very much forward, and I think I speak on behalf of all of the panelists, to kind of to work with European partners and with other businesses in kind of pushing forward and mainstreaming this sustainable building the sustainable business. At this moment, we're not able to take any questions because of the technical difficulties. But as I said, we are really open to continue this dialogue at the break over coffee or whatever. So thank you Amrash, Kelzin, and Mirjana once again for your contributions. And with this and with the optimistic notes, regardless of the challenges you have outlined, I would like to conclude our discussions and to hope that we meet again at one of the next issues of the SDG summit, with kind of even more hard data that will be speaking on our behalf, that we are able to show the progress, and then the things are moving forward in our region as well. So okay. Also, sorry. I think there were no questions. I said that there is not possibility, but there were no questions at this moment. So, which means that everything was very clear from our end. So, thank you guys once again so much for your time and energy, and stay in touch and talk to you soon.
Thank you. Thank you. Pleasure. All the best to everybody. Bye.
All the best. Ciao. Bye-bye.
Bye.